and welcome. My name is Richard Stack and I'm the CEO of Group 16. Thank you for listening with us today. We have an exciting product in store for you savvy investors. I invite you now to sit back and enjoy this slideshow about our new investment fund.
Let me introduce the team. I'm Richard, the CEO. Marco and Dimicazzo are the joint CIOs of Group 16, and Daniel O'Donovan is the COO. The fund today that I will ask you to invest in employs Warren Buffett's philosophy of investing, also known as value investing. Value investing is a type of investing philosophy that invests in shares that have a lower intrinsic value than the actual price. This philosophy also invests in the long term. Not only are we looking for companies with sound financial performance, but also good management. Actions of good management are critical to the long-term net worth of the business and in turn, the future price of the stock. Some of the criteria we used when selecting companies for our portfolio were: the company had to have had consistently growing net profits for the past 10 years. If dividends were to have been paid, then the company must have paid them for the last 10 years. We were also looking for current and quick ratios around 1.5, an interest coverage ratio of at least 3, and price earnings ratios of less than 15. Our investment fund comprises of a variety of securities. Firstly, it comprises mainly of stocks and ETFs. ETFs are a type of investment that are similar to a mutual fund. They track a stock exchange as a whole, such as the S&P 500. The stocks we have decided to allocate our funds to are Amgen Incorporated, Intel Corporation, and Insight Enterprises, and the ETFs we have decided to go with are Vanguard and Mastech Inc. For the bond sector, we have decided to go green and selected the Lombard ODA Global Climate Fund. This green bond that is included will provide our investors with a way to earn tax-exempt income with the benefit of knowing that the proceeds of their investment are being used in a responsible and positive manner. We have also decided to allocate a percentage of our fund into the real estate and property investment sector. The companies we've selected are Power REIT and Neuberger Berman Real Estate. Returns from real estate investment trusts can actually outperform equity indexes. They tend to be less volatile than traditional stocks. This is in part because they have larger dividends, so they can act as a hedge against the ups and downs of other asset classes. Finally, we've decided to allocate a small part of the investment into gold as a way to hedge against inflation. Please see the brochure for more information on each company. This is how our investment fund is broken down into percentages of each sector. And this is how our investment fund is broken down in percentages by each company. We modeled this investment fund on past performance. We decided to model it over November and also over a period of the last 5 years. And as you'll see, that was both to positive effect. Starting with how that fund performed in November 2020 in the left graph. Having started with $10 million invested in all the securities mentioned above, at the end of the period our holdings had grown to 10,698,000, which is a roughly 7% increase. As you can see, we were delighted with this. However, we were even more delighted with our performance over the past 5 years. Again, having invested $10 million of our money into the securities we mentioned above at the same proportion, we have seen that the $10 million fund had grown to just over $20 million. Here are 3 of the things we are doing to protect your investment. Firstly, we make sure that we provide investors with all the necessary and specific information about the fund, which can be found both on our website and on the brochure. Secondly, we offer a highly diversified combination of securities. This is done to reduce unsystematic risk, and it has been proven that during a market downturn, a well-diversified portfolio will outperform a concentrated one. Finally, for some of the technical side of it, we have added non-correlated assets to the mix of our portfolio, i.e. using gold or real estate or government bonds. This reduces the systematic risk by smoothing out the volatility of our portfolio, hence protecting the investor. Also, stop losses can be also set on our portfolio to protect against failing share prices. Put options are also available to protect gains when prospects do not look promising. And finally, the fee structure. Since we are still an emerging portfolio, we use the 1.5 and 10 fee structure. This means we charge an annual fee of 1.5% of total assets under management. This is regardless of the performance of the investments. We also charge a 10% performance fee on the profits generated by the investments. This is charged beyond a specific minimum threshold of profits agreed when starting to invest, and we'll only charge this fee if the portfolio has generated new profits. If losses are incurred, those will be covered first before charging performance fees. This fee structure is reviewed annually and is subject to change. We also offer discounts to investors who are looking to lock up their investments with us for long specified periods of time. Also, 2 warnings. Past performance is not a reliable guide to future performance, and the value of your investment may go up as well as down. Thank you.
This concludes our investment pitch. Thank you for listening with us, and we look forward to working with you in the future.